Well, it's come to my attention that there's a small minority of dissidents who do not like or enjoy ETF battles. Now, I know it's shocking, but now more than ever, we need to have some love and some compassion for each other. We also need to realize that not everyone has good taste, okay? So now that we're all on the same page and we can all agree, coming up on today's episode of ETF Battles is a showdown between the WisdomTree US Multifactor Fund, that's USMF, versus the Goldman Sachs ActiveBeta US Large Cap ETF, that's ticker symbol Gslc. Now, both of these funds play in the factor investing sandbox. Factor investing, by the way, is where the fund manager of the index chooses stocks based upon certain criterion like share price momentum, low volatility, book value, and so forth. It should be noted that these two ETFs are multi-factor funds, meaning they choose or use multiple factors to select stocks in their portfolios. Now, there's a good chance you've not heard about either one of these ETFs, which makes today's battle that much more exciting. Now, this is a very good matchup, let me tell you. And it's so good that it better not end in a split decision. Otherwise, I may protest the outcome. Or maybe we'll do a sudden elimination tiebreaker. How would that look? Quick reminder, be sure to tune into our new episode series called Portfolio Report Card, where I analyze and grade your investments. We'll take a look at your IRA, 401k plan and tell you exactly how you're doing. So it's a new weekly series from ETF Guide TV. Do not miss it. Judging today's scuffle between USMF and Gslc is the illustrious John Davi, founder and CIO at Astoria Portfolio Advisors, and the equally illustrious Todd Rosenbluth, head of ETF and mutual fund research at CFRA. Judges, good to see you again. Welcome back.
Thanks, Ron. Good to be with you again.
Good to be with you guys.
So the four battle categories are cost, exposure, strategy, performance, and then we've got our mystery category where you guys get to pick or choose that factor or several factors that you think are important to this particular battle. As you can see, my scorecard is blank, which means it's ready to go. And so we're going to go through each one of these categories with our judges deciding USMF or Gslc as the winner in each respective category. And then, of course, at the end of the show, we'll declare an overall battle winner. So you've got 30 seconds to pick your ETF winner in each category. And we're going to begin with John. John, you've got 30 seconds for the cost category. Go.
Okay, so this is a pretty simple one. Gslc is at 9 basis points. USMF is at 28 basis points, so quite different. The edge goes to Gslc. Later on, I'll explain, what the differences are between both ETFs, and I think that's what partially explains the higher management fee of USMF. But purely based on cost, Gslc wins.
Excellent. That's a good start. Let's shift to Todd. Todd, how do you see it in terms of cost between these two ETFs?
Yeah, Gslc is the winner. John touched on the expense ratio, which is important. There's also more trading volume. Gslc is a larger product, so the trading spreads tend to be tighter. We'll talk about exposure in a minute, but from a cost standpoint, which is an important factor, the way we at CFRA do our ratings methodology, Gslc is the winner. I'll save the rest of my time for the good stuff.
All right, that's excellent. So you guys both agreed on cost. Now, we got to shift to exposure strategy. So let's stick with you, Todd. Who wins the battle between USMF and Gslc?
So Gslc is the winner on this one. Also, this is more like a core product. It's priced the same as SPY, and it's quite similar. There are differences, the factor tilts that are being done, but there's a large cap bias to this. So you have heavy weightings within some of the mega cap companies. That we think is a positive, especially in this environment. So you're getting some of the exposure that you get, but actually, as we'll see in upcoming parts of it, the performance has been better. So the same fee, exposure is similar, whereas USMF certainly has a deviation, and it includes correlation, which I'm sure John's going to talk about that from a positive standpoint. But it's quite different. That's the goal. It's quite different than a traditional beta product.
Okay. Exposure strategy, Gslc, that's Todd's choice. What about you, John? Do you agree with Todd's analysis on the exposure strategy?
So full disclosure, we use USMF in our models. We are active managers. We manage, factor exposures for our investors. And our whole premise is that the more factors you put in a portfolio, the more diversified you are. And the research shows, historically, you've been able to get up higher up on the Fisher frontier. I think USMF wins. Where we are in the economic cycle, we do favor more mid and small cap type stocks. So we have USMF because it is, very different from your traditional large cap factor ETF. We like that mid cap tilt. It's got about 40% of the portfolio mid cap stocks, and that is because of the portfolio construction design process. So if you want large cap factor exposures, GSLC, makes kind of sense. It could be a core, solution in your portfolio. It can frankly replace SPY, and I think maybe Todd will talk about that afterwards. But for what we do on our side, which is have very different diversified factor exposures, USMF plays a very good role in our portfolio.
Okay, let's shift to the performance category. And you alluded to this, John, in your analysis, but we're going to go through it. So who wins the performance battle between USMF and GSLC?
So GSLC wins, but we've also been in this large cap beta, large cap, tech growth momentum rally the last 3 to 5 years. So no doubt GSLC wins in that front. I mean, it's handily outperformed USMF over the past 1 year, year to date, 3 years. But I think you got to look forward, and my expectation is the next 3 to 5 years, you're not going to have as much of a large cap growth momentum, kind of bias in the market. You're starting to see small mid cap stocks, outperform large cap since the March lows of this year. So, look at backwards looking returns, but also just know that in the future, things could be very different going forward. So GSLC wins, but I still argue that USMF has a good place in your portfolio.
Okay, Todd, how do you see it? Do you agree with John's analysis on performance?
I agree with John's analysis that the performance has been much better in the past 1 and 3 years. Let's put some numbers behind this. In the past year, GSLC has outperformed by 700 basis points. We're recording this in the middle of October. If you go back 3 years, it's 1,000 basis points. GSLC is performing slightly better than SPY, despite charging the same thing that we were talking about. I know SPY is not the competitor, but to put it in perspective, that means USMF is underperforming SPY by roughly that same amount during that period of time. That's not what you're hoping for when you're looking for multi-factor strategies. I agree with John. You got to look forward. That's part of the research that we at CFRA do. We'll get to that in the mystery category, but yes, if you looked at the last 3 years, if you own this, and I think John did, you certainly are wondering if you made that right decision.
Okay, let's shift to the mystery battle category where the judges get to pick what their mystery factor is or multiple factors. So we'll stick with you, Todd. What is your mystery category and who wins it?
So CFRA does forward-looking ratings on over 1,800 ETFs, including these two products. We rate GSLC as a 4-star in October and USMF as a 3-star. I'll explain that star in a second, but obviously a higher star rating, 4 being better than 3. In addition to costs, we look at the risk and reward characteristics of the holdings and the performance record, and GSLC is slightly above, I guess, in a 5-tiered category. So USMF is still a good product. It makes sense in certain portfolios, but we're recommending GSLC at CFRA going forward.
All right. How about you, John? How do you see it in terms of what your mystery category is and who wins it?
So I'm going to look at valuations, and I'll give the edge to USMF. You've got higher gross margins. You've got a higher yield. You got a higher return on assets, and you got a lower PE ratio. So, it's funny, like when I started my career, I'm used to seeing small cap stocks traded at premium to large cap stocks. But because we've been in this FANG trade the last, 3 to 5 years, large cap stocks have completely dominated. Now it's kind of flipped on its head where you got large cap stocks trading at a premium to large, and large cap stocks trading at a premium to mid and small. And I just think in the next 3 to 5 years, you're going to have an opportunity to buy small and mid cap stocks at a discount. And I do think that valuation premium will, converge over time. So I got a fly buzzing around here. I feel like Vice President Pence here at the debate a couple of days ago. But I think the PE ratio is lower for USMF, 18 versus 24 for GSLC. I think anytime you get in the mid 20 PE ratios for any sort of stock, I hear all these things about how now PE multiples can expand because Fed funds is at 0%, but it just going back in time, it's usually a warning signal anytime you get mid 20s or higher for PE ratio. So I like the fact that USMF trades at 18 PE ratio, plus you get higher ROA, you get higher gross margins, and you get higher dividend yield. So I think USMF, for us makes a lot of sense as a satellite factor exposure in addition to, some of the core factors that you have in your portfolio.
So you actually remember when small caps were trading at a premium when you first started your career? I mean, you're showing your age. Was that back in the 1800s, John, when you first started?
Yeah, it was when I had hair too. I think Todd had hair back then too.
I did.
Yeah, you both had hair. And since we started doing ETF battles, I've been losing a little hair. I think you guys are rubbing off on me. So we finished the mystery battle category. Now we're going to shift to our overall winner, and we're going to give each of our judges a final opportunity to weigh in. So, John, you're still up. So who is your overall battle winner between USMF and GSLC?
So we own USMF, so I'm going to be biased, and I'm going to obviously disclose it and talk in our own book here. But at the end of the day, as an active manager, which we are active managers, we manage betas and factor exposures. You've got to do something different than the benchmark in order for you to outperform. There's no real big secret behind that. So USMF does something very different than the large cap indices. I wouldn't even really compare it, but we're having this battle, so it's fine. I think I like the valuations. I like the exposure to mid cap stocks. On a forward-looking basis, I do think it serves a good, satellite factor ETF exposure compared to GSLC.
Okay, so USMF is John's pick. Todd, how do you see it as far as your overall battle winner between these two ETFs?
I mean, this is pretty straightforward. GSLC is a cheaper product. It's offering exposure to large cap, higher quality companies. It's outperformed it by 1,000 basis points within the last 3 years. And independently, CFRA has a higher rating on it. Yes, USMF is a different product and you have much more difference between the beta products, but it isn't working, or it hasn't worked historically. Maybe it will going forward, and it's certainly, I applaud John for being different in his strategy. But GSLC has outperformed and is likely to outperform over the next 9 months, according to CFRA's research.
All right. So GSLC it is. And my overall battle scorecard reads this as a split decision. Can you believe that? I was not expecting this to be a split decision, I do have to say. But this really, when you think about it, this is a battle like which combo meal is better? Which combo meal do you prefer? Do you want the Goldman Sachs factor investing combo meal or the WisdomTree? And it seems to me, I mean, obviously we don't make decisions based upon past performance, but clearly GSLC has won in that department. And I understand, nevertheless, why John picks USMF as a staunch contrarian. So judges, are you surprised by today's outcome? John, let's get your take on that.
We always have to defend our positions. We own things that are very different from your standard cookie cutter model portfolio that you can go and buy online at one of the ETF issuers' websites for free. Again, we've demonstrated our firm, Astoria Advisors, that we've been able to historically, at least, deliver better risk-adjusted return versus our benchmark. Your past performance is not indicative of future results, but USMF plays a critical role in our outperformance, historically speaking. So if it's not broke, don't fix it. You're not going to put your entire portfolio in this ETF, but I think there is a portion that you want to have allocated to the mid cap size factor, and for us, that USMF plays a nice role. So, listen, we get asked all day long, why do we own this ETF? Why do we own that? At the end of the day, we show people our research, we show people our performance. We're always forward-looking. We tend to do better than the benchmark. So again, I'm not saying that's going to happen in the future, but it works, and we're going to stick to it. So if it were easy and everyone did it, then I wouldn't have a job, right? So, because it's hard and it's difficult, and I like playing the game. The game's hard, and for us, it's a challenge. So we like picking different ETFs, and for us, it has worked. The last three and a half years. So.
Todd?
Yeah, I understand why John owns this. It makes sense. All the points he laid out are sound points. We're rating this ETF versus the broader equity universe using backward and forward-looking metrics, including our holdings. We just think GSLC is a better alternative, but USMF is worthy of considering within the multi-factor space, and it's much smaller. So I'll give John credit for not using asset size as the criteria. This is USMF is a much smaller, under the radar pick. That's how active management is going to work. You can't just buy the largest and the cheapest product, even though GSLC is the largest and the cheapest of those multi-factor products. It happens to be a strong one too. So this is a good battle. It's worthy of the fact that we're educating the audience about two products they probably are less familiar with.
Yep.
Yeah, I think, GSLC versus SPY is probably the better comparison, because, you can make a strong argument for which one is a better, battle.
Yep.
But USMF versus GSLC, to me, it's like apples and orange.
Correct. Yeah, it may have been better to do USMF maybe versus MDY or something of that sort. But nevertheless, when we see a pickup in performance, and we're starting to see some early signs of that, we'll see if it's sustainable. But as mid caps and some of those smaller caps start to pick up in performance and catch up to their larger cap peers, I think you'll see a nice pop in USMF. Well, great job, judges, for weighing in. We appreciate your always excellent analysis. Which ETF battle would you like to see? Well, give us your tickers. Give us which ETFs you want to see go head-to-head. Hit us up on Twitter. @ETF Guide is our Twitter handle. You can also post your tickers in the comment section below. I'm Ron DeLegge with ETF Guide. Thank you for watching ETF Battles. And until next time, watch the battle before you invest.